The lure of big money has thrown the investor into the lap of stock market. Making money out of equity is not that easy. It's always important for all of us to know that every rules and regulation is to be followed when you're diving into a particular way to earn money. You always have to follow a set of rules that you construct for your own self to make sure that you don't end up in a huge mess of financial debt. This is one of the reasons why I bring in 10 golden rules that you have to follow when you're investing into the stock market and that you should always keep in mind. To know what stock market is, and if you're a beginner, please do watch my other video which says what stock market is and what are the terminologies that you should know. This time I'm going to bring in the 10 golden rules that you should know if you're an investor or a trader in the stock market. I'm Varsha and welcome to the Freedom English channel. Do not forget to subscribe and download our Freedom app. Added to the fact, the stock market has left a lot of investors in a dilemma whether they have to invest, hold or sell in the stock market. This is a state of confusion that it has been bought in last few years. This is a reason because most of them have dived into this big market without knowing the knowledge of it. There are so many people traveling in a herd thinking that this might be a great investment, but sometimes that might not give you a good chance of hope until and unless you know how the entire structure of this works. Although there's not been a short formula to be a successful investor in stock market, it still sometimes might be a little gamble on your money, but know before you enter. As I keep repeatedly saying that you have to focus on the rules and regulations and hold on to what you have learned and done research about is only because this will increase your stability to sustain in this huge market if you want to be a bull or a bear. If not, you can be a trader or an investor. Sometimes you might also fail. I will not say that this is a complete ladder towards money, but I can tell you that if you're a master of this entire market and you know that you can stand here on the top, I'm going to tell you a few basic things which are called as the golden rules that you have to always keep in mind if you're into the stock market world. First one being, avoid the herd mentality. As I said previously, do not depend on random 100 people who are already investing or trading in the stock market. Have the knowledge of your own. Walk through the path which you want to create by constructing the entire research material that you have read. Typically, the buyer's decision is usually influenced by their acquaintances. Thus, our mind works in such a way that if relatives or friends around us are doing the same investment that they think is good for them, we might also end up doing the same. Since not every duck can hatch a golden egg, that's the reason sometimes their luck might not work for you. Usually these strategies are bound to backfire in a long run. I would suggest that it's better that you do not always take the suggestion of a herd mentality until unless you want to lose your hard-earned money in the stock market. The wise man who is also the investor, Warren Buffett, said that be fearful when others are greedy and be greedy when others are fearful. Following such wise steps and thinking of the way that we can achieve into our success mission is only by doing at what our mind says and what we are good at. Second is, take informed decisions. Well, as I always keep telling, have your own research done before you invest in the stock market. The investor just dive into the market without having a proper research or knowledge about what they're investing by depending upon the company or depending upon the company they work for. Because generally the investors go by the name of the company or the industry they belong to. This is, however, not the right way to put one's money into the stock market. So please be aware of what you're investing for. Third is, invest in the business you understand. Please do not invest in stocks until and unless you invest in the particular business you have the collected knowledge for. I'm not scaring you or telling you that stock market investment is very bad. You can learn by investing small amount. Even if there is a loss, you know what to invest in future. Well, stock market is only good for you when you understand the depth of it and know what is good for yourself. Make sure first you see how the waves in the stock market go up and down. So over the time down the lane, you will understand which is good for you and which is not. I personally believe that you better know the knowledge and then dive into the stream that you would want to invest your money in is the first step towards learning and success. In other words, before investing in the company, you should know what business the company is in. Fourth is that don't try to time the stock. One thing that even the greatest investors don't try to do is time the stock market. Although they have a strong viewpoint when it comes to the price levels in the stock market depending on a particular share, they still do not try to time the entire stock market. However, majority of the investors try to do the opposite of this, and that's when they fail. A lot of financial planners have been telling them to avoid this, but seems like this rate for misleading investment has been rising. In fact, in doing so, many people have lost their money than the people who have made more. Fifth is that follow the disciplined investment approach. Historically, it's been witnessed that even the greatest bull runs have been happening in a panic moments. It's witnessed even in the market, which has inevitably made the greatest investors lose their money. However, the investors who have systematically invested in the right shares on the right time have been making outstanding sum of money. Hence, it's said that to have patience and discipline when it comes to investment can give you money in long run. Keeping this in mind is where investors who have been reaching the great heights have thought so. Next is that do not let your emotion cloud your judgment. Many investors have been losing money in stock market due to their inability to control their emotions. Particularly fear and greed. This is one of the most common emotions that has been occurring in a lot of investors, including traders. In a bull market, the lure of quick wealth is difficult to resist. But greed arguments is only when they have heard stories about investors getting huge sum of returns, and this is where their mind channels them to go invest immediately without a proper research or understanding how the entire fluctuation in the market works. Instead of creating wealth, these investors burn their finger very badly without even thinking twice in what they're investing and just thinking that they're going to earn quick money. In bear market, on the other hand side, investors panic and sell their shares on the bottom price because they might lose even the little sum of money that they're left with. Thus, fear and greed are the worst emotions that play a major role when you're investing, so never let them cloud your mind and make judgments for you. Instead, think of how you can clearly go through and patiently put in your money before you reach to the stage of panic. Seventh is create a broad portfolio. Diversification of portfolio across asset classes and instrument is a key factor to earn optimum returns while you're investing with minimum risk. The level of diversification depends on each individual who are taking an investor's part. Eighth is how realistic expectations. Sometimes we always think beyond what we expect, so our expectations always disappoint. We make sure that we think something in a huge bulk and then get something little. This is not how the entire stock market works. You can never have a couple of expectations and then go invest in stock market, because that's never going to happen unless you have the right knowledge and you have been investing in stock market often. There's nothing wrong when you think what you need is the best during investments. This can also put you in a little trouble towards your financial goals when you have unrealistic assumptions. For instance, lot of stock have generated more than 50% of returns during the great bull run. However, this doesn't mean that you should be expecting the same type of returns when you are investing. This might also differ from time to time. I wouldn't even say it's completely lucky, because this is not what you are looking for. Because of the war, there was huge changes in the stock market and there was a sudden drop down of the stock level. This is one of the reasons that was suddenly unexpected. But doesn't mean that the blame can be on you. So make sure that you are thinking even about your entire knowledge and investing in it in the right time. But that doesn't have to be your mistake. 9. Invest on your surplus funds. If you still want to take risk in volatile market like this, then see if you have surplus fund which you can afford to lose. It's not necessary that you might lose money in the present scenario. Investments can give you huge gain in months which are gonna come. There is no need to say that you can invest only if you're flushed with the surplus funds. 10th is the last one that I'm gonna tell you. This is one of the most important one. Monitor rigorously. We all live in a global village. Any important event happening all around the world might have a huge impact on the financial goals that you have invested in. Hence, we need to have a constant monitor on the portfolio that we have invested in. and keep effecting the desired changes in it. If you can't review your portfolio due to the lack of time constraint or lack of knowledge, you can take advice from the financial planners or someone who is capable of doing it. Well, if you can't do that, then the stock investment is not for you. You better put your money into the safe and less risky management. So before ending this video, I just want to give you tips because since it's related to the stock market, I would also want you to get guided in the right path. So I'm just going to give you basic tips. First one being only invest in what you can afford to save. Please do not make rational decisions when it comes to this huge market. Second one, look at the right investment partner. Please make sure that you're not randomly putting your money into somebody else's hand just because you know him or her, or you know that particular company, or you have come from that business background. Third one is research, research and research, because this I've been telling even in my first video regarding stock market and even in this video, because research is the only key for your success when it comes to stock market. Make sure you have the knowledge of your own just so that you can invest and you know what you're investing on. If you like this video and found this video helpful, don't forget to like, share and comment below. Thank you so much.